Hi, good morning, folks. Just say hello if you are here. Yes, I can see. Yes, I can see people moving in now. Hello, good morning. Good morning. Good morning, Kiran, Garvit, Manoj. Good morning. Good morning. It's a bit slower morning, but nevertheless, we'll wait for a couple of minutes. Good morning, Dr. Manta. Good morning, Abhijit. Good morning, Shekhar. Good morning from Bangalore. I hope you are at home, not on the road. Guwahati must be great weather, Dr. Manta, right? Thank you, Garvit. See, with the daily bites and all these content, actually, I'm sure if you are enjoying it, I am also learning on the way. So whenever we do this kind of a thing, it is sort of mutual learning that continues to happen. So you read about things and you learn as you try to disseminate that information. So it's a win-win situation always on that front. Good morning. Hi, Parikshit.
Good morning, Alok. Good morning, everyone.
Good morning. So should we start or maybe wait another minute?
Maybe a minute, then we can get started.
Another minute. Yeah, yeah. So all of you who are already here, I mean, I hope you have downloaded the Weekend Investing app. A lot of people still don't know about it, but we are trying to get that information out there because that, for at least if you are a weekend investor and using any product of weekend investing, you must have that app because that is something where the information will first get disseminated wherever we have any information to share with you, and of course the support comes through very quickly on that. The response time on support has been drastically reduced using the app. So if you have not downloaded the app, definitely do so. At least give it a try. After trying it out, if you don't like it, then of course it's your choice, but do try it. Okay, so let's start the session. Just give me a second. So this is the quarterly review of the FY24 second quarter that had got completed yesterday. Uh, and this, you can see there in quarter 2 financial 24, Nifty started somewhere around 19,000 levels, went to around 20,000 by mid of July, third week of July. And then we had a significant correction here going from 20,000 to 19,200, about 700-800 points down. Entire August was spent in down correction. And then there was a huge spurt that happened in the first half of September, which also, about 60% of that has been given up by the end of September. So net, I mean, we've gained 500-600 points on the Nifty, but it has been remained quite choppy on the overall sense. So you can see this quarterly candle here. So while we are still making new highs, the candle is not, so encouraging right now. I mean, it is almost like it wants to consolidate. It's somewhat like this candle maybe, or somewhere here. So, from a candle perspective, yes, I mean 20,000 was a huge psychological mark to achieve, and it happens around round number marks that once market achieve a round figure, it goes into a rest mode. Sometimes it has happened many times in the past. So maybe we are resting for some period of time, and then we may try to take it on again after some time. So Nifty versus US market, as S&P 500, Nifty has performed well this quarter at plus 3% versus minus 2% of the US market. Gold has been smashed down. The dollar is strengthening. Interest rates are going up. US yield is up, so gold is getting smashed. So gold has not moved, smashed from recent top by 2%, but not really moved, and Nifty is up slightly. This is how the sectors have performed. So it has remained kind of consistent over last 6 to 12 months and these 3 months also. That PSU, banks, and private sector enterprise and real estate, these have remained, the hogging the limelight in the market amongst all sectors. So you can see here that over 1 month and over 3 months, these three are remaining consistent across the board. But energy is now coming back. Energy stocks are coming back. Infra stocks are coming back. So wherever you see ranking improve as you go from right to left, means that the shorter term performance has improved. And the ones that are getting worse are, of course, FMCG, uh, maybe even financial services has been down here. Media is actually not a significant sector to track because one stock moves it too much, Z Media. But if we see these last 3 months, PSU banks has given a whopping near 26% returns. Public sector enterprise index is up 15.6%. Real estate is up 9.69. Energy is up 9.58, and pharma is up 9%. These have been the major leaders of the last 3 months. And there are not many losers, but just flat performance from financial services, from FMCG, from banks overall, uh, and rest are muted sort of sectors here. In terms of the weekend investing strategies, I'll quickly go through each strategy that we have. It will take 5 or 10 minutes, and then I'll get on to uh, what we are doing at weekend investing, and then we will open it up for some Q&A and try to be done by 11:45. So Nifty 50 and NG 50/50 is the free portfolio which tracks Nifty and gold ETFs. So this quarter has been dismal at 1.4%. Nifty in the same quarter is up 2.3%. Financial year is at 5%, primarily because gold has not performed in this financial year. But absolute returns since we went live is decent, 34.6% for a strategy which is very, very safe. Sort of, just whatever liquid money you have, you could place here and you'll still get somewhere near a double digit, maybe 9 to 11% is the target rate here. So that it has been performing since we went live here. You can see here. Nifty actually is not the benchmark. Nifty plus gold should be the is that benchmark. But for sake of simplicity, the benchmark is there. India top 10 is the top Nifty 10 stock strategy. Went live last year. First year was an underperforming year. This quarter, it has done better. It's up 4.7% versus Nifty at 2.3%. And financial year so far is 16% versus 13%. Long-term average is going to be slightly better than Nifty. That is the uh, expectation from this strategy. It was going well till about November last year, but then after that it has underperformed. But now it is trying to catch up. NNF10, extremely popular strategy. One, I think, top three most popular strategies are NNF10, All Cap, and MI20 now. Quarter two has been good quarter, 7.7% up versus 2.9% on the underlying benchmark. Financial year is 30 already versus 19 on the benchmark. Absolute returns since we went live is 80%, and CAGR since we went live is 22.6. So good overall performance from the strategy. You can see most of the time it has remained an outperformer. We had a big hit here in February of 23, but it has recovered back and going up now. So a good performer there. Evergreen, which is CNX 200 based, so only large caps and some larger mid caps in this strategy, along with the hedge of gold. 25% allocation to gold ETF is there. So in this quarter, it's done 11.6% versus the benchmark of 4%. Financial year is 27 versus 17. Absolute return since it went live in December 21 is 39%. Good CAGR here as well. It was tracking the underlying index for the first 6 odd months, and then it started to outperform. Right now, the outperformance is going quite well, despite gold not doing so well in the last 6 months. MI20 star of the quarter. Quarter two returns at 28.2% versus 14% on the benchmark. So it doubled what the benchmark returned. Financial so far is 65% versus 35 on the benchmark. Absolute return, it has doubled from where we started in July 21. So it's about 9 quarters. 9 quarters, you could have made 101% return versus 42 on the benchmark, and a very decent CAGR there. So you can see that the outperformance, they really kicked very hard from April onwards. So this is one of the best performing strategies, and of course, it is one of the cheapest strategies also. So very, very popular. MI50 is my personal favorite. It's a well diversified 50 up to 50 stocks of small and mid caps. And on small case, it went live in Feb 21, but this is the first strategy weekend investing started with in 2016. So it has been live for 7 years now. But we will take the performance from small case start just for simplicity sake. And this quarter, it has done about 20% returns versus 14 on the underlying benchmark. 49% for the financial, absolute returns of 108% since Feb 21, and a decent CAGR. And this was in line with the index, and last 6 months it has really outperformed well. MI20 is also a very old strategy. It's running since 2017. 18.6% this quarter versus 16% on small cap 250. Financial year is 36.7, slightly short of where we would like it to be because first quarter was short. I hope it catches up. Absolute returns since we started on small cap on small case has been slightly short of what the small cap 250 has returned, and CAGR is pretty decent. Uh, it has been tagging the small cap line since we started. I hope it comes to some great outperformance soon. MI35 is another strategy which is rotational in nature. Tracks against small caps 250. Good quarter 23% versus 16 here, and financial year so far is 52 versus 39. Good absolute returns, almost double, more than double actually, of the benchmark, and a good CAGR since then. You can see that this also has been outperforming since we started in July 21. Good strategies, these two, MI20 and MI35 actually. MI30 is a very consistent long-term, sort of cruiser strategy. Has created 14% return this quarter versus 5% on CNX 500. It basically picks stocks from 500 top 500 stocks only, and it has a lower churn than a lot of other strategies. For this financial year, it is up 35% versus 18 on the benchmark. Absolute since we went started on small case is 60%, and a decent CAGR here as well. So there was a period where it was a bit underperforming, here as well as here, but then it has picked up post that. All cap is a very long term, I would say, most popular strategy on the weekend investing platform. We went live in November 18. This quarter has been a good quarter for this, 15.8% versus CNX 500 at 5%. Financial year is also decent so far, 30 versus 18.8. Absolute returns since we started live, and this is just amazing, 259% versus 93%. This is how the strategy has run. It had a golden couple of years in 21 and 22. Of late, it has not been able to beat the performance since, I would say, November 22, but it is catching up and is likely to do that. So it's very, very promising. And if you just notice here from 2018 when we started till almost 2020 March, so 18 November and 20 March, 1.5 years, the strategy was underperforming, and just see what it did after that. So always, have faith that the strategy will come back and will perform for you. ATH, another all-time high strategy, which has been very, very popular. 7.8% returns on this quarter. Financial year is in line with CNX 500. No great shakes. I will not mince my words to say that this is a great performance, but I think there can be periods where some strategies will have some underperformance. Absolute returns, of course, is rocking because it had also some great years in 21, 22. Right now, it is consolidating and hopefully should break out again very, very soon. ATH2 is another all-time high strategy, very nimble, invests in smaller cap stocks than ATH. But not necessarily small caps. This quarter has been very good, 20.1% versus 5% on the benchmark here. FY24 is 38%. Absolute return since started in July 21 is 19%, much shorter than CNX 500. ATH2 had a disaster of the first year, but it is now catching up very, very rapidly. So you can see here how it badly underperformed, and now it is catching up to the performance. And over the next few years, I'm hoping that it will take out good outperformance. So this was all about strategies. I hope you have looked at your own portfolios also, and properly uh, you know hedged and diversified across strategies. If you're holding one strategy and you have more capital to invest, try to, and if you reach that optimal size on that strategy, try to have more strategies to make sure that there is a possibility, always a luck, a probability that any one strategy may not outperform in any one year. I mean, there cannot be any expectation that every strategy has to perform every year, outperform every year. It is possibly not possible. So always have, if your capital allows and keeping your expense ratio low, always have some diversification across strategies, so that one strategy, even if it is a bit slow in any one given year, does not overall impact you. What's new at weekend investing? Lot is new. Lot of things are new at weekend investing. In this last quarter, our team has really worked very hard. So I want to congratulate my team first. And this is a weekend investing hangout debut that we did. So we had a session in Delhi where almost I think 90 or 100 folks had taken out time and had come over. We had a very nice discussion. There was a Q&A session and extremely healthy interaction on weekend investing and markets in general. And we are hoping that every quarter we come to one city and organize this. We want to meet more of you, and whatever is possible for interaction, we are trying to do at our end, so that there should not be any gap between your understanding or your requirement of support, or your feeling that I'm not able to reach out to the team or to me or to for any support, etc. So in that light, we have introduced the weekend investing app. It's very exciting to have the app and have everybody come onto the app. So far, I think about 5,000 people have already come onto the app. I'm hoping more will come on. Especially weekend investors should come onto the app, because that is where all the content regarding the strategies also will come the first here. So in terms of the content, I'll quickly explain you that first we have the daily bites that comes on the app. There are market nuggets. So these are stories about stocks, about sectors, about benchmarks, commodities, currencies, a little bit of macro. Then you have a lot of strategy, performance related stories there, market psychology related nuggets there. Good, Bad and Ugly weekly review with video is also going there. Monthly market roundup discussions, and all this is available free for whoever downloads the app, whether they are weekend investors or not. But for subscribers of weekend investors, we've kept a premium section. So if you are a user of any weekend investing product, you are able to access this premium section for free. And we doing an educational US strategy there. So this strategy has been running since several years as a study, and I'm offering that strategy, just as a sharing of that strategy with weekend investing subscribers, in case they want to learn through it, use it whichever way they like. uh, Also trying to do exclusive online and offline meetups. uh, Sometimes we also offer watch list of momentum stocks, market mood analysis, sectoral momentum trend analysis, Nifty stocks analysis, and essentially premium, videos where we're trying to analyze some part of the market which is not available to everybody else. So this is the app. It has all the products listed. So whether you want to execute our strategies on small cap, on small case, so you could use this to subscribe. You could also go to the universal offerings where you could use any broker. You don't need the small case platform in that case. Or if you want to take on the stairs product, which is the Nifty and the finance Nifty product for trading, you could do that also. Support is on tap. So you have a facility. You can book a one-on-one appointment with our team. uh, on most days there are several slots, so you could create a booking of the slot and have a 10-minute discussion with our team member. I also try to join sometimes these meetings. So I mean, it is essentially a really good way of a one-on-one interaction. If you are facing some support issue that we are not able to solve otherwise, or if you want to ask about any strategy or anything that you think you need our support with, we are here to be there. And of course, exclusive content, already gone through, that is also available on the app. So do make a use of the app. You can download it both on Android as well as App Store. So this is something that we have started in the last few weeks, a weekend investing research desk. So all the stories that we create in terms of analysis and reports is also now being put into a blog format. So we have a blog editor who will edit all these stories and present what I am speaking in those videos in a blog format, and that goes out as a daily one short email in the evening. So you get the entire day of our various articles as well as the daily bite readable format. So if you're not watching the video, you can also read about it, if that is the preferred mode of engagement for you. So this is all I have for the presentation. uh, and what is the time now? 11:25. So we have 20 minutes. So let's open up for any questions. So if you have not, so I will not go to the top of the comment section, but I will. What I'll do is I'll create a comment here, and I will start to take questions below this comment. So 11:24 is my comment. So if you have any questions, just put it in the comments below this, and I'll take them one on one for the next 20 minutes. Please send your questions.
So there is one query on Mr.
I'm getting the
Chug.
question. I'm getting the questions. Yeah. So Mr. Chuk says, in your website there's a pop-up which says enter details, get free course link. I tried a lot of times but did not get any link. Okay, so
Yeah, so this
please
has
speak
been
about that.
resolved now. I've
Okay,
spoken to Team Learn App about this. So this has been resolved. So the next 3 or 4 days you'll be able to access the course properly without any lags. Yeah.
okay, okay. So this stands resolved. Uh, okay, one sec. Come here. Garvit says, since the time Nifty crossed 19,000, it never went below that level. Amidst all the headwinds, Nifty comfortably taking support. Do you see major downfall? So I mean, this is of course anybody's guess. Nobody's guess is sacrosanct in the market. But yes, you are absolutely right that the kind of relative strength our market has shown so far, it is just phenomenal. And the fact is that uh, if we continue on this path, I am fearing that at some point of time in couple of years, if this kind of narrative continues that India is the fastest growing country and FIIs are also sending in money and domestic money is also flowing in, we will not have much enough paper to serve that kind of capital that comes in, and that will create a huge sort of bubbly situation. But for now, I think market is well supported by the liquidity that is coming in domestically. But if the situation overseas becomes painful, then I don't think any kind of liquidity will sustain, because buyers will withdraw their hand very very quickly as soon as there is any fear. So major downfall, if we see overseas, we will also have a downfall. I don't think now that we can prevent a downfall sort of contagion. But yes, I mean, I think we will continue to do much better than others. Sartaj says, thank you for sharing your knowledge. Thank you, sir. But what is the query if you have any? Okay. Okay, let's go to the next one. Jayesh says, any plan of starting a new rotational momentum strategy like MI20 and MI35 or Nifty micro cap? So no, micro caps are very difficult to have a strategy on, because see, as an individual you can trade your capital on micro cap or even smaller nano caps, whatever you may want to call them. But as a collective group, you need a lot of minimum volumes on stocks to really enter and exit. Otherwise, you'll have those wild 10-20% swings every time you have a buy and sell. So, depending upon your own capital, you should select the market strategy. And I can tell you, it is not easy for institutional or large investors to deal in small caps also. I'm not even talking about micro cap, even in small caps. Just 5-6 years back, there was a very popular PMS fund who had garnered 1,500, 2,000 crores, and investing those 2,000 crores in 20 stocks became a pain for him, because to invest 2,000 crores in 20 stocks means 100 crores has to go into one stock. How many small caps are there which can absorb 100 crores of buying or selling? So you have to see, there is a limit of everything, right? I mean, it's like a road. I mean, it has a capacity. How many cars can go on it? I mean, you put in 5 times the capacity and everything gets choked. So this is the same concept here. I mean, if you are having your own capital, maybe you can trade micro caps. But if you are doing a larger set, so if all these talks about funds and ETFs on micro caps, I think they will have a very hard lesson in coming times. So micro cap investing is for individuals, it cannot be for a group. Okay, one question per head, please, because let me, clear doubts for everybody. Can you make a particular timeline on app or web where people can share their thought or talk about any stocks, like on Slack? What is the ringing? Just a second. So I think right now the app is not set up for this, but we can always look at this in terms of the comments are open. So if I'm creating a feed, I think you can easily comment on it and also comment on each other, but I don't think you can initiate threads like Slack here. But yeah, we can look at this at some point. Mithun says, hi, sir. Good morning. Good morning, sir. Doing great job. Is that you researching stocks for us? Is it your team doing? So all the research is still at my end. My team is entirely looking after support and looking after the client interaction. regulatory compliance, but the research currently sits with me. Next question is from Atul. I downloaded your app and I'm getting benefited. I like daily bites. Really helped me. Thank you, Atul. I'm hoping you have a query. Kiran says, what is your view on mid and small cap rally? Is it over or just the beginning of bull run? So let me pull up the chart. 1 second, just give me a second. Okay, mid caps. So start of the bull run, you can't say. I mean, when you are sitting here, you can't say this is the start of the bull run. I mean, it is for sure a decently extended arm of the rally. We are near, even on monthly basis, we are near the highest RSIs we have achieved in the past rallies also, although that is no indicator that the rally cannot go further. But from here to go, multifolds is a bit difficult. We need consolidation. We've had 6 straight months of gains. I think we need some consolidation, but because this rally that we had in 2021 came after a dramatic fall of the COVID crisis. So if I were to see from the pre-COVID level, this rally went from 22,000 to 32,000. The 50% gain from the previous top. So if I were to see, that we had achieved 32, 33,000, and if I were to go 50%, just for the sake that we get a similar kind of count here, we will achieve somewhere close to 50,000. So maybe another 20% could be possible here. Every time mid caps have broken out of the previous highs, they've gone up about maybe 50%, 40% in one go, and then some rest, and then another rally after that. So having a 50% extension after the previous high is, I think, good enough for any stretch. And right now we've done only 20-25%. So there may be more legs to this. One can't be sure, but you can't say this is the start of it. And this is definitely a continuation of what we saw here and going up. And the way the landscape is changing, nobody can really call how long the rally. If 80% of the dollars in existence have been printed in the last 4 years, there is a gush of money in the world. India is the bright spot in the world. Who knows? Some pension fund may say, I'm putting few 100,000 per month into few $1 billion per month into India market. I mean, market will go bonkers. So it's difficult to call it. At least I can't call it, but that's how the situation is. But it is a continuation of a run. You should not call a top to the market until you see a top. You should not be guessing a top. I mean, if you were guessing a top, you could have guessed it here, you could have guessed it here, you could have guessed it here. Don't guess a top. Have a strategy which will tell you that yes, top happened at that point and now I'm down. That's okay. Okay, bull bear 30. So first I should ask you whether who will win now, bull or bear. But nevertheless, your view on combination of MI all cap and ATH2. It's a great combination. I think it has the punch of ATH2, which is more peppy mid caps and some small and large caps, and of course the bellwether all cap is there. Percentage of gold allocation. So my long-term thumb rule has been age divided by 2 as percentage of your net worth. So if you are 50-year-old, you should have 25% gold. That is my view. A lot of people don't agree with me. So that is the question. Garvit says 1 question per head is too less. Let me see if I can go through all the other questions and I'll come back to your questions. Don't worry. And you can always drop me an email and I'll answer all your queries. If the small case value, Deepak says, if the small case value exceeds the money put in, should we partially exit or continue? Money put in is no criteria. Money put in is a misleading number which the platform gives you, because if you put in 100 rupees, and you sell 100, and you again put in that money, and you withdraw money and you again put in that money, it will keep adding that money put in figure. So don't track money put in figure. See where the recommended range of that small case product is. If it is 5 to 10 lakhs and you were exceeding 10 lakhs by a wide margin, I think it's time to diversify to some other strategy also. Yeah. So
Current
you
value can be tracked majorly.
yeah. So current value versus the optimal value, as we have suggested at various places, that you can track. There is no hard and fast. We will not come with a danda in our hand if you go from 10 lakhs to 12 lakhs on any strategy. But it is for your own safety that the uh, if the value is exceeding the optimal level, don't go too far beyond it, because slippages will start to happen in your account. Your own performance will start to be impacted. Okay, Garvit. Is there a possibility of stocks in momentum that can be missed out from MI portfolios? All the time? All the time there is that possibility. There are 1700 stocks. We are capturing 10 stocks in one strategy, 20 stocks in another strategy. All the time there will be possibility that we will miss on stocks. So I guess the rest of the question is already answered. Akhil says, what are your thoughts about SGB versus gold ETFs like gold bees? So, okay, I'll give you a 2 minute thought on gold. First of all, everybody should have gold allocation. That is my view. Second, the format of gold allocation is of choice as well as diversification. So physical gold is at the top. There is no uh, replica of physical gold. So the number one potential target should be to get some physical gold. Number two could be sovereign gold bonds, because of the ability of these bonds to be capital gains tax free. That is the first criteria. The surety and the backing of the central government, or sorry, the RBI. That is, and the third is of course the extra interest of 2% that you get, 2.5% on those bonds. So again, I mean, gold bees and gold index funds come at the last. Gold bees is very good for, let's say, short term holding. If let's say that you're going to liquidate in 1 year, 1.5 years, 2 years, gold bee is good for that. Gold fund, from my perspective, is a no, because why would you want to pay a manager a good expense ratio, uh, where you're giving money to a manager to say you hold my gold. So it's basically you're paying for storage cost, right? Might as well go to MMTC. They are also providing a storage cost of physical gold. They also provide digital on their app. So going to a fund which only invests in gold is senseless actually. I mean, you are going to a custodian of gold, and he's going to charge you 1% for holding that. Might as well go to a gold storage company. They maybe possibly charge you much less for it, and also hold, you are assured of holding physical gold behind your unit. Tomorrow, if the AMC packs up, I mean, your gold is as good as gone. So these are the risks associated with third party. See, the whole idea of gold is that there is no counterparty risk. This is the only asset in the world which has no counterparty risk. Please spend a few minutes after this meeting to absorb this concept, that there is no counterparty risk. This is a piece of a thing, and nobody can impact its value. If you are holding land, Some land record may change, and some miscreant may change their name on their land record, and that is no longer yours. You have a demat account, your demat account participant goes belly up, your demat stocks are in danger now. Your bank account, banks go belly up all the time. Yes, right now we have assurance of RBI that they will not allow any depositor to be hit with any fraud. But the ability is there. What happens if tomorrow government doesn't have the money to back up, right? So this is the only asset in the world which is a global asset, not priced in Indian rupees. It is priced globally. You can go, and I've done hundreds of videos on how people in Turkey, how people in Japan, how people in Venezuela, how people in Pakistan have saved their lives by having proper investment in gold. So while I'm not saying don't invest in equity, definitely invest a significant portion in equity, but see gold as an insurance and as a mandatory cover for whatever else you are doing. You would have seen whenever the major events happen, equity goes down, gold goes up, right? So why this happens? Because every time any fear is there, every time any uncertainty is there, the investors and the whole world will go to that one place where they are assured, and that assurance is not coming from a third party, it is assurance by itself. That is the beauty there. So that is my few thoughts on gold. Okay. uh, Last 3 minutes. Gurtaj Singh says, I trade put bull spread using absolute momentum. Okay. My many times my view goes right, but I face some issues with liquidity. Can you please list top 10 15 stocks with good liquidity in options? So we don't trade stocks in options at all. Our stairs program also trades only in Nifty options and Fin Nifty options and Nifty futures. So I am possibly not the right person for this question. Uh, Let me take a question from somebody. Osho says, by the way, Osho is also my one of my favorite persons I like to listen to. I mean, it's a lot of he makes a lot of sense. If you go back and look at the old videos Osho has made. But how do we learn your strategy? So a momentum strategy is very very open. It's like open source software where it's open to everybody, and you can build your type of strategy in that. So I've done several videos, I think with Vivek Bajaj and a couple of other interviews where I've given some strategies as sample. You could go to the Learn App course that we have on our website. I've shared the strategy there. If you want to read some books, you can read books from Wesley Gray. You can read a book from
Gary Antonacci.
Gary Antonacci. You can read about momentum. Couple of books. So just do a search, and you'll find that it's a very open strategy. You have to build your nuance in it. The momentum is just like an open source platform. How you will use that momentum for your strategy is something. If you're specifically asking for what strategy I am using, I'm sorry, I will not be sharing the secret sauce with you. Okay. Good question. Vipul says, if market timing extends, what will be the impact of stairs and how will it work? So this is a very good question. And from the various surveys that I have done, several thousand people have responded to that. Nobody wants this. So I'm still hoping that this will not come through. But if it does come through, we will need to see how we will have to continue with stairs. I think no uh, study of any backtest can really give you any answer how this will impact. So this will have to be a learning process on the go, because this is something that has never been done before, and hence the contours of the strategy itself may have to change if this were to come to a live situation. So we are waiting and watching. If it does happen that way, we will take a call at that point. Last question, please. Anybody who have not taken so far? Mr. Mithun, I have been invested in MIMT Calcap for 2 years. My XRR is 13%. Strategy 5-year return is 30%. Is this a large deviation? Will staying invested above this? So last 2 years for MIMT All Cap has not been as good as the previous two before that, and that is why the long-term 5-year returns is higher. We do hope that in due course of time it will normalize, and that is the nature of these products, that they may have some very lumpy years, they may have some normal years, they may have some down years. So stay in any strategy for a longer period of time to really determine where they are going in terms of the returns. Thank you so much, everybody. I hope I've covered most of the questions. Garvit, I'm sorry you have 6 more questions, but I can't take it right now. So this is all I have for today's session. Thank you all for coming on a Saturday. All your encouragement, all your nice feedback, your best wishes, they all go a long way in keeping us, positively oriented towards keeping doing this. So thank you all for all the love that you share with us and our team, and we hope to see you in the next episode of the quarterly review, and in other on other meetings also. Thank you. Bye bye.
Thank you, everyone. Bye.